Drop it.
It's days like today where I think we should all take a moment of silence for all the money lost. Anyways, I can't play the music because it's not royalty free, but nonetheless, ladies and gentlemen, it is unusual on a Monday for me to be breaking down my six-figure stock portfolio. I try and leave that to Fridays, but today is the exception when my phone is blowing up from everybody calling me, texting me, asking me what the heck is just going on. I'm going to break all of that news down for you in a bit, give you some of my opinions, but first, yes, the portfolios, guys. My combined Scotia iTrade accounts are worth $127,399 at the close today, and my Royal Bank account sits at $3,159. And this, I'm not going to try and come across rude here. I have been very, very lucky through this market volatility because I am actually still up on the year. I started the year at 130,800, and I am just slightly above that right now. And I'm not trying to say this as a brag. I've just got really, really lucky for factors I mentioned in past videos. But from the all-time highs of 152K, I'm down about $20,000. So crazy stuff going on here, guys. So let's go through the accounts real quick, see what's getting hit the worst. Starting with my Canadian sectors, guys, which has been hit unbelievably bad today because of what is going on in the oil sector, which I'll get to in a second. But starting with the Canadian financials, just getting slaughtered today. We're seeing bank stocks hit lows they haven't seen in a very long time. In fact, Canadian Imperial Bank raised their dividend for this coming quarter, and the stock dividend yield is already at like 6.9% or something as of today. Canadian Imperial Bank dropped to $85 a share. BNS now in the 50s. Mind you, at the high of CM, we were looking at like 120. This is a wicked drop, looking at $2,000 losses in the financials. Moving down, the safest stocks to be invested in right now, I'm going to say, are utilities and REITs. They're the ones that have barely been affected at all. Looking at Northland Power, Ryocan, even my GEO group in the U.S. is not really down a whole lot from where it was currently sitting. But taking a look overall, guys, it's a slaughter fest. And this is a perfect time to remind people of what happens when you're holding highly leveraged companies. For instance, if we go into my RSP, which is surprisingly still in the green, but taking a look here, guys, you can take a look at Tesla, which is actually holding up better than I thought. But companies like Facebook, tech companies, they're not that leveraged. They're very safe companies. I'm not worried about them. I wish I could give you a better example, but I try and avoid any heavily leveraged companies because the risky companies don't do well in these circumstances, even if they have no exposure to the virus, if they don't have any exposure to any of the other aspects to deal with oil or energy, they're still getting hit through all of this. And the ones that are leveraged the most are just getting slaughtered right now, probably due to many factors, probably people pulling out of ETFs, probably people getting margin called. There's so many factors pulling into this market right now. And I feel horrible for anybody that is exposed to the Canadian economy in any large way, considering our Canadian dollar just took a kicking during all of this because we're primarily exposed to a lot of oil in Alberta, and it is not doing good right now, guys. So we're seeing the Canadian dollar drop massively, which makes me pat myself on the back a little bit because I've advocated this since I've been investing for the last 5 years, is get your assets really diversified away from the Canadian economy. 72 or 73% of my total assets are diversified completely outside of the economy. Even most of the stocks I hold within the Canadian economy, like Northland Power, they have great exposure to Europe and other countries where the dollar is much, much stronger. So when they make income, it's just worth more. In fact, everything I pretty much do at this point, aside from my full-time gig as a magician, is made in USDs. So I'm so happy because I'm technically making more now than I probably ever have been. And it also helps my portfolio. Another reason why my portfolio hasn't been tanking as bad as most people's is because I'm highly leveraged in USDs. So those USDs just became worth a heck of a lot more today. But I want to touch base on a few things here, guys. I don't think I need to scroll through any of the other accounts. I mean, in my Royal Bank account, Wells Fargo taking one heck of a kicking today as well. These are all on my buy list, by the way, but I'll get to that in a second. If we can take a look, though, at the broader market, starting with this unbelievable chart of the S&P TSX, basically index related to the energy and oil fields. Oh, my God, guys, down an unbelievable amount. All the sectors related to oil just taking a kicking. And if I can explain to you what is causing that, I am not the person to do it sufficiently. It has a lot to do with a contract with Saudi Arabia and Russia that ran out, and Saudi's flooding the market with oil, but I don't want to skewer any of the information. Matt Money is the BP engineer. He is the oil baron. He is the god of oil. And you need to go check out his most recent video where he talks about oil price collapse, and he explains it in quite a humbling way that I really enjoyed personally. So I'll leave the link to that in the description below. Highly suggest you watch it. Taking a look at the other indexes, we got the S&P 500 just unbelievably down today. Not from the first crash. We're still up a little bit from that first crash. Taking a look at the last 5 days. Let's take a look here. In the last 5 days alone, the S&P is down 12%. S&P TSX taking the worst hitting ever, which, considering our economy and our GDP has been in the red since 2014, we did not need this to happen any more than it already has. But we can see a massive decline in the basic. It's the same S&P 500, but it's the Canadian version. I know some people get that confused, but it's the same kind of broader spectrum market in the Canadian economy. Now, we have one heck of a storm building up for a further market correction, and it is just not good right now, guys. Talking about that virus is finally starting to curate, and it's just the news is getting worse. Italy's running into huge problems. We had our first death in Canada from it, and then on top of that, we just had to get hit with the flood of oil to the markets and all the winding into this weird market condition. And if we can take a look at one stock right now that I just can't get over, and I feel bad for like financial education, if I can get my mouse to work here, I want to show you guys CCL, because I love talking about this stock because it was the one that kind of started the entire interest in the virus and where it was affecting certain stocks. And a lot of people became highly attracted to this stock. And this is one of these reasons you don't want to rush into market downtrends. If you're a cost average investor like I am, where I'm throwing money in pretty much every month over the month, I don't really care about the market volatility at all. I don't find it really affects my emotions in the way my portfolio moves, considering I think I have a world-class portfolio right now. But when you buy new companies and you get caught up in these downtrends, what ends up happening is you're catching a falling knife. And if you were somebody like financial education right now, well, those big chunks of CCL you've been buying, Carnival Cruise, you are down 20% today alone, and we don't even know if the dividend at 9.2% is going to be reliable until we get to first quarter earnings. So if you are interested in getting in this market, in fact, we are opening up some accounts for my friends, my girlfriend. We're going to start investing with people that are interested because it is a prime time to get involved. But if you are buying stocks now on the hype of things that are cheap, just take it with a grain of salt. Stick to world-renowned companies that can afford to get through this and just ride it out. Because if you're a little bit older and you're looking toward retirement, this is going to be some scary stuff for you, and I understand that. But if you are, and I don't know how to talk to those people specifically because I'm just not in that situation, but hopefully your portfolio is as world-class as mine. You pick really great companies. But if you are new to investing and you're at the age I am, say in your 20s, early 30s, just don't start leveraging yourself into this market. I mean, be real patient with it. I'm expecting this to continue to ride out at least until first quarter earnings come in April, where we can finally see the full effect of how this is kind of interacting with the individual stocks. And this is where things will start to level off. But honestly, this is going to be the year of the crash. We're finally starting to get into crash territory here, guys. In my personal opinion, it was very well needed. If this didn't happen, the S&P would have been heading into bubble territory. And luckily, this kind of re-stabilized how the market's supposed to work, in my opinion. But now it's getting a lot more irrational toward the downside. We're seeing panic selling, and it's just not a good way to invest. You got to be calm during the storm and just can keep on track of cost average in, slowly put money in, allocating it appropriately. And if you have a large chunk of capital, nothing wrong with throwing it at those good companies, but just be prepared for further downside because we don't know how worse the news is going to continue to get before it gets better. I feel like we're in the eye of the storm right now, and we're about to pass back into some craziness until we see some resolution, but it could take easily another year for this to blow over. But yeah, guys, just be patient, relax. I don't know what everyone's all worked up about. I don't know why my phone's blowing up on a regular basis. People get so fascinated by the volatility, but it's the same thing with owning a piece of real estate. You know, if your property dropped 20%, are you going to go and panic sell your house tomorrow? Probably not. And it's a good time to remember this as well, that time in the market is by far better than timing the market. And again, this comes back to holding world-class companies. But if you decided to sell out of the market, say over there, I think if you had 100,000 invested since 1980, today it would be worth a couple $1 million. And I think it was something like 15 or 20 trading days made up for more than half of those gains. So if you weren't in the market for those 20 or 30 best trading days over the last 20 or 30 years, you pretty much missed out on most of those capital gains. And we can't predict that, guys. So, I mean, I'm looking at my portfolio down $20,000 right now and saying it It doesn't bother me. It's just a little bit of dust off the shoulder. I'm still holding incredible assets. So I'm not worried personally whatsoever, but it has been an entertaining day, might I say. I had my internet go out most of the day, so I've been watching these markets on my LTE on my phone. I was texting scammers trying to waste their time, and my phone bill jumped up by $200 this month, which I'm currently trying to fight. And then on top of that, I still have to deal with taxes and the government. Good thing work is picking up and sales are good. So I'm just in a bad time right now to be investing in the markets. My liquidity and my cash flows are weak. So I'm just sitting on the sidelines, going to probably reinvest the dividends for the time being. And I'm really hoping this continues. I know a lot of people aren't. A lot of people are getting scared. But I am going to be the first person to be lined up next month once my financials are in order to be buying stocks. Now, what stocks am I going to be buying? You're going to have to stick around. You have to subscribe to the channel, hit the like button, and stick around to find out what I find really interesting right now, because my door is opening up to all kinds of new companies. But I hope you guys enjoyed this video. I'd love to hear what you think about all this in that comment section below. What a fascinating day. This week of videos that I'm going to be releasing are probably going to be primarily related to different sectors, how they're being affected by the market, and it should be fun. So stay cool, stay awesome, guys, and I look forward to chatting to you tomorrow.